Future trading involves risk and is not suitable for all investors. Content provided in this segment is meant for educational purposes and is not a solicitation to buy or sell commodities. Opinions and statements of guests not affiliated with Everag are their own and do not reflect the views of Everag. The accuracy of their statements cannot be guaranteed by Everag.
Hello and welcome to another edition of the Grain Feed, brought to you by Everag. This is your weekly news feed for all things grain and all things feed. Each week we bring you updates on the markets with unique perspectives from an amazing team of analysts with the intention of helping dairy and livestock producers manage their risk. I'm your host, Jim Matthews, reporting from Chicago on a beautiful fall Thursday morning. Joining me today, as always, from Kansas, Director of Feed Procurement, Mr. Jake Kingsley, and returning to the Grain Feed, Chief Science Officer at Everstream Analytics, Mr. Mark Russo. Team, how are we today?
Doing well this morning, Jim.
Doing great.
Excellent. Mark, great to have you back. Where are you reporting from today?
I'm reporting from the western suburbs of Chicago, so also enjoying this fine fall weather here in Chicagoland.
Beautiful. It has been a gorgeous little stretch here. Let's keep it up. Jake, you were out in New York. Speaking of nice, beautiful weather, how was that?
It was great. The leaves are turning. They were catching a little bit of rain, which I think they needed. Starting to cool off out there. I think they had been unseasonably warm up until just a week or so ago. So maybe that finally gets their harvest rolling along. Their beans looked ready to go, but their corn, a lot of it looked pretty green for the first week of October.
Okay. I mean, Jake, I'd say that was pretty similar to what, for those of us that went to the World Dairy Expo in Madison, Wisconsin last week, I'd say it's exactly what we saw from the road heading up and back, and also what folks were telling us too, right? Beans are ready to go, but corn is, I don't know, we got a couple weeks yet.
I think that falls in line in New York as well.
Yeah. You also love fall foliage, don't you, Jake?
I love it.
You love it. It's gorgeous.
You should see how many pictures are on my phone. I'm going to have to get a new memory card.
That's beautiful. All right, before we run through the markets, Mark, would you mind refreshing the viewers and listeners on your role and what you guys do at Everstream Analytics?
Sure, Jim. Well, again, Mark Russo, Chief Science Officer here at Everstream Analytics, also a certified consulting meteorologist. And here at Everstream Analytics, we do full end-to-end supply chain risk management and mitigation. We're a software as a service company, but then we also do advisory services as well. And we cover all kinds of risks, not just weather, but anything from socioeconomic to all kinds of different risks, geopolitical, that could impact supply chain operations and logistics here around the world.
Okay, excellent. Well, I'm sure it's been an extremely hectic time for you guys. Obviously, we've had extremely adverse weather in the Southeast, and we're thinking of everybody that are affected by these back-to-back very aggressive hurricanes in that region. But of course, it's also then it's harvest here in the Midwest United States. They're trying to plant down in Brazil. There's just a whole lot to focus on with some weather. So we're super excited to have you on. Before we review Paige, if you would kindly timestamp the broadcast, about 10:15 Chicago time, a quick look at the markets. We do have a WASDE report tomorrow. So recording on Thursday, WASDE on Friday morning. So that's our monthly supply and demand report from the USDA. We've got markets, at least from corn, is trying to just hold steady, unchanged. We've got December corn kind of hovering at that 420 area, still off the highs from last week, but not willing to make this full breakdown into harvest pressure just yet. Maybe waiting to confirm what some of those numbers look like on that WASDE report tomorrow. We do have no beans back closer to $10 than they are $10.50. So we're trying to hover around $10.15 at the moment, down a few cents. We've got soybean meal, that not as stubborn little byproduct lately. We seem to have rounded out from the highs early last week. We have December meal down below $3.20. We're down $4 on the day towards $3.17. So for us end users out there, it's nice to see this protein market continuing to remain under some pressure. We'll be asking Jake about that here in a bit. But first, Mark, holy smokes, where do we start in terms of talking about the weather? What are we seeing out there?
Oh gosh, all kinds of wild weather going on around the world. I guess We could start closer to home here with some pretty extreme conditions on both sides of the rainfall coin. We have the extreme wetness and flooding in the southeastern U.S., a lot of that driven by these back-to-back hurricanes, Helene and Milton, that have moved into the southeast here in recent weeks. But then at the same time, we have seen extreme dryness develop across actually a good chunk of the rest of the country. Obviously, that includes here much of the Midwest growing areas, portions of the Delta, up into the plains, both southern and northern plains, and even out across the western U.S. So it's been kind of a tale of two extremes here in terms of rainfall. And then from a temperature standpoint, it's been quite mild here. Actually, much of the country, a little bit of variability out east, but really the story has been outside of the mild temperatures. It's just been the extreme precipitation on both sides.
Yeah, and we've seen obviously, massive impact already from Helene, and then to be followed up with this, thinking of our dairies down there in the southeast, and Jake has touched on potential impact from the crop side as well in terms of how it would impact cottonseed. So it's just interesting. You have folks in one part of the country that probably don't want to hear how dry it is everywhere else, but that has been the case. We saw the updated drought maps this morning. I mean, those maps are getting a bit more yellow, a bit more red in certain areas. So it'll be super interesting. Speaking of dryness, how about our friends down in Brazil? I feel like they were a bit delayed in terms of some of their key seasonal rainfall that they're hoping for as they try and time out that bean planting. Any news down in South America?
Yeah, this is the week here where the rainy season is now officially beginning across much of Brazil. It is several weeks behind schedule, what it normally does, typically during the second half of September. But this year it is delayed, but it is now kicking off across Brazil this week. In fact, over the past few days, there's been some rain development here, some showers and thunderstorms across center west Brazil, also some frontal system rains that have moved into southern Brazil, even the eastern sections of Brazil, some of the coffee, sugarcane areas, along with some of the at least smaller producing soybean areas there in eastern Brazil are now starting to see some rains. And it's looking now for the next few weeks that these rains will continue. So that will continue to accelerate soybean planting and just benefit crops in general across Brazil that are being planted, as well as improving soil moisture, pasture conditions for livestock as well. So big difference compared to the pattern of late this past winter in South America, exceptionally dry, one of the driest winters on record. And so for some parts of Brazil, this extreme dryness goes even further back to last growing season.
Yeah, so super important for these guys to finally get this weather they are now receiving. And like from what we've been watching in the markets, I mean, perhaps at least a catalyst to give some pressure to the soybean market. But from the corn side of things, it's been a reason to maintain at least a little bit of elevation in futures because folks are trying to look forward to that second crop that comes in after beans are out of the ground, right? That's safrinha crop. So as we've delayed that bean planting, you delay that harvest potentially and then delay the planting of that second crop. So we have to just keep on monitoring that situation way down south. But also in terms of grain elevation, another reason for corn remaining perhaps a bit stubborn here lately is that wheat has also been holding fairly firm over the past few weeks, if not a couple months here. A lot of chatter of that having to do with potential, severe dryness in certain Black Sea acreage, Western Russian wheat acreage. Any commentary on what's happening over there?
Yeah, Jim, it continues to be a serious situation from a soil moisture standpoint in the heart of the Black Sea winter wheat belt, especially the key southern region within Russia. That's their biggest producing area. They have record low soil moisture, like some of the basically the lowest, with records going back 20, 30 plus years. They're at their lowest levels. This dryness affected their last winter wheat crop, but now as planting is ramping up across the region, it's record slow pace because of the dryness. And looking out ahead, we're not seeing any major improvement throughout the remainder of October. There has been some computer model guidance at times that has suggested some better rainfall prospects, but that's out in like the 2-week forecast or even beyond that. So it's something to keep an eye on, but at least in order for us to start forecasting better rains and a more optimistic situation here for Russia, those rains are basically have to be on the doorstep.
Looking at the wheat market as folks are start planting wheat now here in the US. I mean, folks have been asking us, at what point do I step in and start trying to maybe hedge and or even market this wheat that I'm planting right now? And we're looking at the board saying we're getting a boost here in pricing for reasons perhaps not necessarily directly here in the US, but from abroad. And it feels like that Russian situation, that Black Sea situation, is certainly helping elevate that. Mark, let's move a little bit further west from the Black Sea. What's been happening over in the European crop acreage?
Yeah, Western Europe has been exceptionally wet, especially in countries such as France, and that has significantly delayed corn harvesting and now beginning to impact their winter wheat planting. Past several weeks has seen above normal rainfall and even some record precipitation totals that has led to flooding. And in fact, in another kind of tropical impact, we saw what was Hurricane Kirk in the Atlantic. It didn't affect the US, but it actually now is affecting Europe as the remnants of Kirk have moved into France and portions of Western Europe, producing some heavy rainfall, gusty winds. So that's also a feature out there in the grain markets as well.
I feel like when we're at this time of year in the States, obviously we're very focused on one thing. It's harvest. Are we getting out there? Are we in the fields? But there's a lot around the world that continues to impact us. So Mark, thank you very much for those insights. Jake, let's turn her over to you then. How is all this impacting the cash markets? Because you were just out in New York over the past few days, running around with Bryce Windecker, fellow Everagger.
Yep. Rolling around Bryce's neck of the woods out there.
And you made it. You survived it.
Well, we survived. I think we might have thrived. We'll find out.
Yeah. All right. So what'd you come back with?
Well, like I said earlier, those guys still looks like the corn's pretty green, but by and large, yields, at least the eye test from the road, looks good. The numbers on stuff that they've been out there and been able to get started on sound like they're pretty good as well. So I expect that will hold true for most of the crop once they're able to get out there. Basis numbers in that part of the world are beginning to become pretty attractive on the canola front. Soybean meal has been close to where we'd like it to be. And with canola getting some pressure, I think primarily with that Canadian plant coming back off of a strike and ramping up their production, canola could put some pressure on soybean meal here in the near future as well. Corn basis in that part of the world has been at what I would call average harvest values for quite a while. It's just a matter of getting the physical grain moving out of the field now. So cash values in that part of the world are pretty attractive. I wouldn't do much to talk anybody out of buying feed up there. We've seen a lot of the same across the Midwest, again, anticipating these big yields. Corn basis numbers and soybean meal basis numbers across the heart of the grain belt have been attractive for quite a while. It feels like canola is trying to settle down a little bit and become a little more competitive. Again, this goes back to Canada and Chinese purchases slowing down and some of the logistical issues between rail strikes and crush plant strikes being worked out, starting to just free up some of that inventory and help supply rebound. So really, futures have been driving the purchasing decisions in that part of the world here, and we had a pretty healthy rally there a couple of weeks ago. We've since recovered most all of that on soybean meal futures, and we're working our way back towards some of the more palatable ranges on the corn futures market. Midwest folks step in and can own some feed comfortably here. I think if there's one place that we're still preaching a little bit of patience, it is these rail dependent markets, particularly in the Western US. Some of those folks in the Southeast, they had some good opportunities to get some decent basis started, especially on corn. Protein wasn't quite as appealing, but harvest may help that out a little bit. But yeah, our Western US folks, the rail dependent markets in Texas and Arizona and California and that sort of thing. Soybean meal's been good. Canola's starting to work its way in the right direction, but corn basis has been stubbornly firm. A lot of that is rail freight and higher values in the Western grain belt where some of the stuff is originated. But we continue to hear an expectation of very large yields in the Western grain belt that in theory should help us see a breakdown in basis prices as harvest really gets going and that corn starts moving to market and they start to run out of places to put it. We can be a little patient there for another couple of weeks. I think what we've been starting to frame up for folks is that if we get halfway or 3/4 of the way through corn harvest, and basis still hasn't broke, it might be time to start stepping in and taking what you can get there, especially if you like the futures number, because at a certain point, the bin doors get closed up for the season, a bunch of ground piles get covered up, and this stuff just kind of gets tucked away a little bit for the winter. And then basis probably has to do some of the work to bring that back out to market. Now, I don't expect some huge run up in basis post harvest, but once we get to that point, it's probably going to be tough to see it move a whole lot lower too.
And I think, Jake, we would love to see futures make a stronger pull back towards $4 nearby over December futures. And we talked about the wheat market potentially giving a little bit of a pause for elevation there, but as well as just some of the corn acreage around the world giving a little bit of elevation too. We saw managed money over the last couple months really scramble to cover up that massive net short that they had. That helped bring futures up as well. Had a little bit of longshoreman issues there, maybe causing an additional squeeze. But I think that report last Monday from the USDA, that stocks report, I mean, we've had the most corn, beans, and wheat on hand here in the United States in roughly 4 years or so as of September 1st. So we know it's here. And if we really are going to stick with a yield as impressively strong as the USDA has maintained, at least since the August and September reports, with tomorrow's October WASDE report, one could argue there's going to be a lot of corn coming out of these fields here in a couple weeks. One could argue, and therefore maybe get some of that harvest pressure that we've been talking about. And we'll see what that does to both basis and futures for that total flat price that folks are looking at on the cash side of things. So it's going to be an interesting little stretch. But in the meantime, gentlemen, thank you both for being on today. A huge thanks to Mark Russo for returning to the show. Mark, thanks for being here.
Thank you so much for having me. This has been awesome.
Absolutely. It is always a pleasure. Always great to see you. You've got your colleague, John Davis, out in Europe. He's going to be at the Bear game on Sunday in London. Can we get a bold prediction for the Bear game?
Bears by 7 is my prediction here. So, and bear down.
Mark, you get me all excited, man. You get me all excited. I'm usually on here with Packer fans. I've got Jake here. He's a Chiefs fan.
We're changing this. You're changing this. This is great.
Exactly. Yeah, we're trying to figure out a new system here. Yeah, we're on a different trajectory now, aren't we? We're on a different trajectory. So great to have you aboard. We'd also like to thank Corey and the Everag Insights crew for their support. Thank you to Paige for her production magic. And thank you to the viewers for watching the Grain Feed. Contact information is on the screen. We greatly appreciate your feedback. That's all for today. We'll see you next time on the Grain Feed.